There always seems to be something going on in the world at the moment that could affect the housing market. You have inflation aggressively increasing, the cost of living increasing from almost every angle, and the Bank of England have recently announced that they are removing stress testing from August the 1st, 2022. So what does all of this mean for the housing market? Is it still worth buying? Stay tuned for my housing market update, July 2022. Let's go. Hi, my name is Alex Kerr. I'm a qualified mortgage broker and my passion is simplifying the mortgage process for first-time buyers. Let's get into the vid. So let's talk about the increased cost of living and how this is affecting the mortgage and housing market. So in the last year or so, inflation has increased from around 1.6% to 7.8% and energy prices have almost doubled. Taking that into account, mortgage lenders have recently been updating their affordability models to take into account the increased cost of living. When that change filters down to you, the first-time buyer, that would mean your borrowing potential would decrease. Not by a huge amount, but it could be the difference from being able to buy the property you want and not being able to buy the property you want. Where to be careful is if you have had an agreement in principle within the last couple of months or so and are looking to borrow the maximum the mortgage lender offered at that point, and on the basis you still have not yet found a property. Because between the time the agreement in principle was provided and the time it takes to find your property, the lender may have updated their system with the new cost of living increase applied. And therefore, when you essentially convert the agreement in principle into a full mortgage application, once you have found a property, you may find you cannot borrow as much as the amount that was initially agreed in principle. In theory, I feel the banks should honour the original amount, but as this situation has just arisen, there is not enough information and data on the table to understand fully how lenders will approach this. So just be careful, it may be worth checking with your lender. Stress test removal. The Bank of England announced that it will be removing the stress tests applied to mortgages as of the 1st of August 2022. So what is the stress test? This is where a mortgage lender will apply a calculation to your mortgage plus 3%. So if your rate was 3% and your monthly payment was £500 per month, your income would also need to afford a rate of 6%, which is an increase of 3%, which would therefore be a monthly payment of £1,000 per month. First-time buyers often say to me, I'm paying £1,500 a month in rent, so why can't the mortgage lender lend me the equivalent? As the maximum they are offering me is a mortgage amount with a payment monthly of £1,200. And I've been paying £1,500 for 3 years, so it's obvious I can afford it as I've never missed a rental payment. Well, this is where the stress test comes in, and that bit of room between the maximum monthly payment being offered from the mortgage lender and the maximum you are offered as a rental payment is a buffer which has been produced from that stress test. So if rates go up, you can still afford the monthly payment and therefore in theory would protect yourself from being repossessed. So it's there to protect yourself. However, the Bank of England have just announced that they will be removing this stress test. We are in a bit of a catch-22 situation where whichever way we turn, a problem is going to be created. The Bank of England have been increasing rates recently to try and slow down inflation, and as you know, as mentioned before, mortgage lenders have applied an update to their affordability models due to the cost of living increasing. So this move from the Bank of England has been met with varying opinions, but it is an effort to try and counter the cost of living and keep the housing market moving. So taking all of this into account, should you still buy a property? So this is my honest, humble opinion, and I apply this to my own approach when buying a property to live in. So the property market does go round in a continuous cycle, or at least that's what the history of the housing market until this point now tells us. This is based on factual data. Normally somewhere between 10 to 20 years there will be a cycle of boom and bust. It's quite hard to predict when that may happen. The last time was in 2008 when we went into a recession. This means buying a property is much harder. You would need to put a much bigger deposit, more like 40%, if we're in a recession that affects the housing market. Whatever price you buy your property for today, in the future, anywhere between 10 to 20 years' time, that property price would have at least doubled. So for me, I've recently purchased a property. I wouldn't be overly concerned if house prices halved within the next year, because I know long term there is a big chance the value will come back. As long as I have a roof over my head, I'm okay. The mortgage will still be paid off at the end of the mortgage term, and the property will go to my daughter. I remember when I had many clients who decided to hold off buying a property towards the end of 2007 because property prices had hit an all-time high and they were hoping that the prices would come down, and surely they couldn't go up anymore. It seems impossible to think that a property you buy today could be worth double in 15 years' time or so, give or take a few years on either side. But history tells us this is what happens. And these first-time buyers that decided to wait were then hit with a recession a few months later, which meant a lot of mortgage lenders were not lending anymore. It was really difficult for banks to borrow funds from the money markets as no one was moving, and the lenders that were lending required at least a 40% deposit. This went on for almost a decade. It's only been since around 2016 that the market began to make a full recovery. Properties that were purchased in 2007, 15 years later in 2022, will be worth much more. And you can check this out on Rightmove sold prices, for example, which will have a history of sold properties, the year they were sold and the price they were sold for. So if you are thinking of waiting, just bear in mind you never know what's around the corner, and it could be another decade until you have the chance of buying a property again. So if you are anywhere between the age of 18 to 40, it wouldn't bother me too much what happens to the market, as you've got plenty of time to repay the mortgage and for the value to come back up again. So if your mortgage is for 25 years or more, that time should allow for that cycle to happen. There is, of course, always the first time in where this pattern could change, but this is based on factual information which is repeated time after time since the housing market began. If your property value did decrease significantly, that could, of course, put you into negative equity and mean that you cannot move into another property until you are back into positive equity. But I know I would much rather be stuck in a property I owned than in a rented property. At least I am repaying the mortgage back and the property can increase in value again, and I have complete control of my own property. Today's question: are you wondering what to do in today's housing market? Let me know your thoughts. I would really love to know. Mortgage warning. Please note, we do need to let you know that your home may be repossessed if you do not keep up with repayments on your mortgage. So thanks for watching today's video. I hope it has provided you with some useful tips. Please check out the show notes for a recap with access to any links discussed today. Please consider subscribing and ringing the bell to receive notifications on our latest videos. I've been Alex Kerr, providing the best tools and tips to first-time buyers. I'll see you in the next one.